Hey everybody, welcome back to Cover Calls and Short Puts. My name is Mike Fairborn. It's good to be with you all. Sitting in again, once again, for Cameron May, who is out, folks, today. I want to take a look at, really tying in the flag pattern into maybe some of the short put scenarios and setups out there in the market. Specifically with the flag pattern, we have a couple of different concepts we could look at. With the flag pulling back down, are we going to look for premium? Or are we going to look for a position on that? Because a lot of traders will look at either one of those two. Sometimes they're looking for that option, potential option income versus taking on a position there. That's a number of just interesting trades out there in the market as we are continuing to see that rally. So looking forward to diving on into that with you. Folks, joining the chat with Barb Armstrong today. Say hello to Barb. Great to have Barb here for with us for this chat. I think she does is a regular fill-in for chat for Cam's class here. But hello to you, Wiley. We've got Tony, Mark, Virgil, Michael, as well as KOF, Rojo, and Mike again. So with that, folks, let's some disclosures to get going here. So first off, options carry a high level of risk. They're not suitable for all investors, and information here is for general information purposes only. Now, as it does state, investing does involve risk, including loss of principal. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Paper money software applications for education purposes only. A stop loss order will not guarantee an execution at or near the activation price. Once activated, they do compete with other incoming market orders. An important point because we're going to be looking at least 3 to 4 trades today, example trades. With a stop limit order, you risk missing the market altogether. As it states, in a fast-moving market, it might be impossible to execute an order at the stop limit price or better, so you might not have the protection you sought. Some final notes in here too. Risks, there are risks associated with investing in dividend-paying stocks, and we do have a few of those stocks that we're going to be looking at here, including but not limited to the risk that stocks may reduce or stop paying dividends altogether. Okay, with that, let's do this. I'm going to go ahead and pull up the Thinkorswim platform. So we've got a straight shot of that. And there you go. Looking at our markets, folks, and still just a continuous march forward here with this rally. And really, as we look at this, I mean, I was looking at just, a couple days ago, actually through last week too, but just kind of observing the fact that we've got this incredible, I mean, from this low, it's really, 1 month, 2 months. We're moving on into a third month here, question mark. I mean, we started off the month and the day, nice, it being June 1st here. In terms of nice for the bulls, okay? There are two sides to that equation. Obviously, it wouldn't nearly be as nice for the bears. Not after a move like that. That was really a V-shaped bottom that just kept on going. I mean, it didn't stop at the V, did it? We got like another sized V in there too. And here we are again. So a quick note on that. Let's just check in real quick just to see where we're at on something like this, longer term. One of the things I do like to look at is just coming in over here and just taking a look at a quick seasonality study. I'm just under style up top, get into chart mode, and then seasonality right there. Now that is your average seasonality the past 5 years. I'm going to go way out. I'm going to go 20 years. Now that's a large difference in price, so we've got to make this comparable. In fact, I'm going to do that by simply clicking on the wheel. Okay, got to know these steps. Click on the wheel, then go over to price axis, and then go into show price as a percentage. Better? Yeah. Now we can compare this 20-year average. That's a 20-year average, okay, of price action Jan through December. I put the big one out. You've got the percentages over here on your y-axis, so you can take a look and see where we are. But how do we normally fare during this time of year? Now, interestingly, we are up on average over this time frame. It's just that we're not normally up like that. Okay, that's a big move. Although one of the bigger moves out there, and oftentimes I refer to this as the summer rally, it does actually kick in June. Notice though, June is a little bit sideways. There's a little bit of consolidation in June, it's generally up. It's clearly up on average, and then it does rally in July. Now, will we get that? We don't know, but that's what we get, and then we tend to get this sort of sideways da da da. But the June has often been referred to as, the old timers would refer to it as the summer doldrums. That's this kind of like thing, and you can go back 50 years and see something very, very similar to this. That's like this, but then there's the summer rally that kind of happens towards, more towards the end of summer. Rally. There you go. Up here, consolidation. But that would be interesting to see over here, would it not? If we were to get a move like that. So that's kind of a crazy setup and a scenario over there. But it's fascinating to see this on a big, longer term scale. So let's just do this real quick. I'm going to go ahead and we'll zoom back out now and just dive in because I did want to do a quick, super quick overview because we already took some time here. But let's do a quick overview on the NDX because, folks, the NDX has been really a key mover. I'm going to switch back now, though, clicking on the wheel, going back to my price axis and jumping back over here, taking that show percentage off. Okay, so here you go. Big rally. Uh, Looking over here, which I do like to do in the Mag 7, we've created our own Mag 7, sort of, by what we've done previously, but I mean, just by adding the symbols in, you can do that. It's very flexible. The platform does a few cool things like that. But you can see over here, if we were looking at like a longer term flag, though, flag pattern, you might actually have a little bit more room to go. I have to tell you, in terms of tech, it could be interesting, but we could see, that move coming up, a question mark. I don't know. Uh, there could still be some room in there to run. You look at some of the companies out there, and I want to start off with this one first. It's part of the Mag 7. I didn't want to erase this one, so let me just do this. So I'll click down here, and yeah, it takes a little while to type up all those symbols. Make sure you got that right. But here is Google. Looking at Google over here. Now, Google did come down a little bit. Now, what I have over here is a bit of a longer term sort of a move, as you can see. Prices coming over here to the right-hand side, a little bit of a consolidation. Now, with that consolidation, you can see over here that we've got the possibility of, well, could there be a flag pattern? I want to see kind of incorporate that with the move to the upside and kind of position it this way. Do we want to look at it? Because with short puts, minus P for short, there's a couple things we could look at. We could look at premium. Do we want to get the premium here? And that's just the income, right? Do we want to get the premium, folks? Or do we want to get something else? Do we want to get a position on this? We could get a position as well. You've got to consider that with the short put because as we just explained, the short puts can be assigned at any time, and some traders, frankly, want to get assigned. Position. Which one? Sometimes traders can do both, depending upon where you sell your strikes at. But just looking at Google right here, we can say the trend is quite strong. The earnings, they beat earnings very, very nice. I mean, 263 to 511. I'm going to look at several other stocks here, but I just want to, this is one that's fairly liquid, one that we could actually, consider looking at here. But what could we see here? I mean, we've got this pullback. There could be, I'll zoom in now. Actually, let me just do this over. There you go. Look at this. So as we look at this, I mean, support, yes. At the bottom of the gap, a lot of times traders will look for support there. There also is, I mean, there's a bounce there. By the way, where we're at here, sort of where we closed at, is there support? Oftentimes traders will look at support there. At the bottom of the gap, so you got this here, top, bottom. This is a range. I do like to go over here, just as I'm getting used to selling puts, right? And just saying, well, where do we stand here? It's about up top, it's like a 365. And just below, it's more like a 355, 55, right there. 355, 360. It's in that range. And so if we were thinking about selling a put in there, what are we looking at on, some of the expectations? But what we're really doing is we're selling below a support level. Yeah, that can be interesting because there could be a barrier, right? And if we're looking for premium, we could see a bounce. If we're looking for a position, we just think, if it does get assigned to us, hey, there might be a longer leg in play here. In other words, I'll just connect the dots here because I got it right here. Look at this. Here's the pull it up, connect, pull it up. That's a big round number at 500 in terms of the first kind of termination point or an expectation of the way a lot of traders would look at this. By the way, I got to pull it down a little bit because we did dip. But if we do bottom off this level, because we did actually fall a little bit further, I'm going to activate this by right clicking, pull my line down. Oh my gosh, it's like we're right at 500 right now. Now I don't know if it'll bounce, but it's just funny. It terminates right at a big round number there. These levels are of interest. 400, did we stop there? We did. 500, we might, in terms of a target. So let's turn on over now and just look right at some of these strike prices. Now, something I want to point out here, and you guys can see we have a few that we have listed in here, but the thing is if it's a longer term pattern, okay, we want to maybe potentially look out to here we are, we're down to 17 days. That's below our level. So we've got 20 to 40 oftentimes, or 20 to 50, 40 to, I'll just say 50 over here. This could be looked at, right? Still going out, even if you've got an existing position on, does it still fit? Maybe is there fundamental strength? Is there a follow through? This is just simply, in this case, not a short put vertical or anything. That's a different class. We're just looking at a short put, maybe for a potential position or whatever the case might be. Position or premium. So coming over here and looking at it are deltas. And again, a delta just simply signifies a $1 increase in the underlying stock. With a $1 increase in the underlying stock, folks, the option range, because that's what this is, would move approximately by the amount of the delta. And that also signifies to a lot of traders a 16% expectation that we wouldn't go down to that level. Traders that are okay being assigned because they don't want to miss a bigger move might go further up, in this case, because we are on the put side, further up the delta chain. Maybe closer because the deltas too, 20 to 40. Oop, that's a 20 to 40, and that's a dot, a 0.4, right? So the option can move that much. Of course, we're looking at this option potentially going to zero would be kind of the key scenario there. So further up the chain, if we were looking for an assignment, remember the two levels we just looked at? What can we get on those? Well, that's a dang good spread. 13 plus million shares on the stock are open interest reference over here in terms of the liquidity of the option, the spread itself in the thousands. There's the 355, there's the 365, both in the thousand range. All right, for July, the spreads with that oftentimes can be better. They could just be tighter spreads. Look over here, but that 355 a little bit lower, that's 730. We might be able to get, notice the mark right there. I did put the mark in here. I think that's helpful because a lot of times they will fill you at the mark. It's just a quicker, and that's an obvious one, right? Sometimes they're not so obvious just to try to find the middle ground, but there you go. 740. Now think about this for a moment. Depending upon where we're at, we're going to look at it both from the premium and a potential premium position size or position on both of these right now. So let's do this. I'm going to jump back over here. I'm going to kind of, that's actually a pretty good zoom in. We'll go a little bit deeper. There we go. A little bit closer to it. So here is our 355 range. It's about right in, well, 350 is in the middle there. So we're probably just below this level. In other words, we were talking about the top of that gap, which is, like we said, a support gap is a lot of the way traders will look at this. Okay, now if somebody is okay being assigned there, let's just say prices go, and the short put could be assigned at any time. We can go up as much as we want, sideways, or even down quite a bit. Three directions. And often a trader will they'll just think they're going to get the premium only. They're just going to get the premium. So that would be, this is a standard equity options contract. That would be $740. Let's see, that's what they, anticipation if they're holding above that level by expiration. Now, if it's really close to it or below it by expiration, they would anticipate buying those shares. Now, let's think about that scenario too. I'm going to throw out both here because I think you could use actually either of those two scenarios for a premium or a position on this particular strike price, because some strike prices will do that for you. You might see both. And the reason I would say that is we've got this long-term support. In fact, we have support right there. That's, close to 355 that would be selling it. But look what's right below it. What some traders would look at is they'll say, you know what, this is a major weekly high. And if I am in this range, because it is a range, if I get assigned here, maybe somebody's anticipating this. It comes down here and bounces, and then the longer term trend continues on up. We did get a fundamental read. They almost doubled their earnings number right there. They seem to be hitting on a lot of cylinders. That's just a fundamental expectation. But notice I'm pulling the fundamentals out now because we're looking at a potential position from that short put. Now, what's the thing I'm missing, folks? And happy Monday to all of you, by the way, as well. I missed that. It's Monday. What's the thing we're missing here? What do we get when we sell that put? Even if it gets assigned to us, do we still get the premium or not? And if so, if we get the 740, does that lower our total? One way to look at it, does it lower our total cost? Now it's not just 740, $7.40. There's a multiplier here when we're looking at standard equity option contracts. That's 100. So per contract, $740. I did put the 740 in because 740 isn't a great number to kind of use as we're comparing this with price. Now let's go over here and let me just highlight why I put the 740 in, because when we're looking at options, it's a really, really super nice comparable when we're saying, if I end up having to buy this at 355, I do get to keep that premium. So if I subtract out the 740 from this, where could, a consideration of my total cost be? This is one way to factor it. It's actually below 350, 347 range. So where's 347? Well, it's lower. But that's the benefit of the premium here. Let's pull it up. 347. There you are. So there's 355 range. Okay, top, we measured it pretty good, the top of that level. Strike landed right on it, but here's 347. So the actual, in here is 347. So not just here, but that premium could offset this. So let's do this. Let's go in and let's put this guy in. Now, I'm not going to put on there it is. It dipped into it a little bit. So our numbers just changed, but that was the calculation we're looking at. Now it's about, the mark is about 735. So I'm going to utilize that mark column, which is great to have right after 735. Tab through, confirm, always read your dialog box. I'm not putting an exit in here because we're also taking the side, a stop order, a potential exit, because we're anticipating maybe a position on this too. It can go either way. Premium position, we're willing to take it either way. So there we have it. Buying power effect, you can see the max loss. Always understand what that means. That means that we got assigned 100 shares and Google went all the way to 0. Now, the likelihood of that, some would say, is incredibly low, that Google goes to 0, particularly in the next 46 days. In other words, they go bankrupt after such good earnings. But I mean, we have to look at it. And that also assumes that you don't get out of the stock. But I did want to highlight it anyway. So just always be mindful of that max loss. Now, that would change if we were doing a short put vertical where we could define the risk. But in this case, we're looking for maybe some ownership too. And we want to try to maximize that potential premium. How are my numbers doing? Are they holding up? 55? No, not really. They're dipping. That means the price has bounced back a little bit. So I might not get the fill there. See, all this talking didn't help us out. But at the end of the day, it is, in fact, a paper trade. Okay, there we go. Example trade. There you have it. They're going to fill it. Anyways, we put it on through. Let me just double check that. Yeah, 720 for the 355. We did go out to July. Now, there are others out there too we could focus in on. Now, if we were to look at, because this is, I would consider that kind of a flag type pattern. It's still fitting into that mold of a flag. Did you see the BP requirement on it? It was about 5K. A change, Michael. Yeah. Because on this, yeah, so good question. And I kind of like had a little precursor to this, and that is if we're looking for the ownership, we're looking to own it, then we might not have like a stop order because we think, hey, I'm okay trying to own it down here. You could add one in if you want. Let's add one next to this next one because we'll be looking at maybe more just a premium here. So here's Akamai Technologies, another big bounce. And also over here, solid beat on earnings. We have the earnings gap. Now, with that earnings gap again, because we're getting a lot of gaps in earnings, what are we seeing over here? Well, there's a gap right there, and within that gap, there's support. There's a band there, clearly a band, a range. And what we could be looking at here is also maybe some support. I mean, that's that. Let's look at it this way. You've got to look at the price pattern itself to give us some ideas of where support could be. These are all going to be short-term levels. You'll see them a lot easier on a 30-minute chart too, which I think is really, I've noticed over up top, I have set up the charts on a 30-minute base, daily 35. So I could just click, click, click through these. But look at this. That was a prior low, a prior high, and we're above it. 150 happens to be a big number. That's why when you're choosing, sometimes like flag type patterns or strong moves going forward, if it goes up, that's like the best case scenario because it could be quick. And what happens there is that premium that we'd be getting off selling that put maybe just stands in a better position. Let's say it is a 135, which is below short term, below short term, below short term, and even towards the top of that upper gap. In my book, that's 4 levels of potential support right there between us and where the stock is trading at right now. If our goal is to gather premium, why not put some barriers in place between there, that also fit? Now, they don't always fit this way, but sometimes when you get a sideways move, you get some of these potential support levels lining up. Let's go to a 30-minute chart so I can highlight these a little bit better. That's not a lot of data, but we can multiply that data very quickly just by going here. You guys see it? Right there. That was the level I was just talking about, right there. That 150. Do you see it now? And what are we seeing? It's actually a little bit of a flag there. Now, I realize I'm going into a shorter term range, but I mean, some even go like this. By the way, a little quick story here. I had an old friend of mine. It still cracks me up to this very day. He goes, I finally found a trade, a trading range that works for me. I don't know how he found it. I don't know. It was on some platform or somewhere. But folks, it wasn't 30-minute charts. It was 30-second charts. So you get a bar every 30 seconds. He found his range that he loved. And I was just like, I told him, I said, how do you trade that? Isn't there a lot of volatility there? And there was. There's a lot of static. You start going down, the lower you go, we're at a 5 right here. It gets a little bit choppy unless you want to look at it through the eyes of a 30-minute or a daily chart. But yeah, 30 seconds, that was the key for him. I mean, I don't know. For me, wow, that's just really tough. I mean, even if you're right, you know, and a flag pattern unfolds on a 30-second chart, I don't know, maybe let's draw out another 30. Maybe you make 30 cents. It's not a lot. But if you're trading it all day, it could work. I don't know for some traders, but I haven't talked with him in a while. I should ask him how his 30-second charts are going. Anyways, let's get back more into some of these more standard time frames. I'll put it that way. And let's look at that 135 right now. By the way, folks, if you're getting any value for this presentation, smash that like button. Give us a follow on our channel, which is Trader Talks. We have 198,000. Love to have you if you're not already on board. 198,000 subscribers. And I'll pull it up right now just so you know where to go. It's right over here. You got Barb right here as a coach. If you click on playlist, you can go down here and check out a number of Barb's great classes she's got. She's got a few great classes, obviously. You see her on the road as well. But I do chat for her in her Trading a Smaller Account. Great class. Filled in for one of those classes too. Fun class to teach. But yeah, you get a number of different coaches in here. Be sure to check these out. If you guys want something similar to what we got here on Tuesdays, I do swing trading where we do a lot of price patterns. This class here was simply just two patterns in one. This was a longer term flag and a shorter term flag pattern within it. And a lot of times traders will have a higher expectation if you get those smaller flags developing within inside a larger flag. I'll go ahead and just put that playlist out if you guys are interested. End that right now. Did I copy that right? No. Many of you already go to the class. If you do, just ignore what I'm saying. There it is, 198,000 subscribers. But love to have you guys on board. If you are interested, and here is the swing trading. But we got one for tomorrow. We're going to be looking at, basically off certain ranges using other types of unique indicators tomorrow for highs and lows for those swing trades. But on that note, let's continue on. 135 is where we left off. Let's go over here. Short puts. The 135, where are you? And we know Akamai has some volume. What's our first potential check? Volume up top. How's the volume doing? Some traders say, you know what? I need greater than or equal to 1 million for short, greater than or equal to 1 million on the stock. What about open interest? A lot of traders are saying this. Get me a higher number. We might need to actually look into a shorter term one. Ooh, this is going to be a fun one. We're going to do a sub. We don't quite have the volume. It's been picking up. It's been picking up like today. Look at that. 517, but this is a great check. For our 135, let's compare the June. We've only got 19, and that is wide. And I would say, let's bag it. Let's just see what we've got, because I think, oh yeah, look at the implied volatility on this, 64. So that can be really helpful if you get a higher implied volatility, all else equal in terms of the premium. This is going to be a short-term premium type play. Let's look at the 135 here as a comparison. Oh, much better. We're in the thousands, not 19, 1,400 and change. Okay, the spread is okay. It's okay. It looks as though we had some volume today. And a lot of times if you get volume like this, they're probably getting some fills right in here in the mid-range, which is where the market, right? So they could be right in here. So let's just shoot for something a little bit closer. But again, what's our delta? Wow, the 135, it just popped up to 16. But some traders would say there's only a 16% chance using delta as a guide of the price of the stock dipping below 135 by when? Take a look right there in the next 17 days. That's not a long time. Not really. In fact, I'm going to pull this up just so we have it. Oh, I had one here. I forget it. Okay. Check out your calendar. Today is Monday, June 1st, and the third Friday is actually Juneteenth, so it's not even closed. So it's a little bit shortened in terms of like, 3 weeks left. Anyways, it says 17 days. Let's just go click on it right now. By the way, we could choose others, but I'm going to stick with this one. It seems to be quite liquid. I'm going to shoot for like the one at $1.80. Now, I did mention to you what we're going to do is we are going to put on here. Let's do it this way. I'm sorry. So I'm going to click here on the bid, and I'm going to sell custom with a stop. That was a request that we'd had previously, just to look at it. But our stop is going to be something like this. Okay, so we're going to say 180 to take in. So we're going to say over here, we're willing to risk with a 15 or a 16% chance of success. I should say expectation of success or chance, whatever, what people are saying, some way that traders will use that, of going below that 135. Now we found, and remember we counted 4. Now there were a couple of short-term levels in there and maybe a little bit longer term levels of support. So possibly this number could be even better. Now, having said that, if we wanted to risk a 1-to-1, if we stand to gain 180, if we get a fill on this, if I just multiply it by 2, that means I'm going to, and it's going to be 360. that means I'd be willing to risk what I'm willing to make here. But what are my odds? Maybe 16% or less? 16% or less chance of it going against me. But I don't want to risk too much. Potentially, right? We're going to try, you could try to get a fill, but 360. So get me out at 360. So I'm willing to risk 180 to make 180. But key word here, at what some traders would say, just a, a higher expectation of being right, of being profitable. It's not to say we can't get out early if we're making some premium or get out sooner, but I just want to give you guys that concept because that 16, remember, there's a fewer number of days. So I'm just going to show you that approach. You could always go less. And some, by the way, would say, Mike, take it when you go more. You could do that. That's something maybe we could do, in the next week. We can have both sides. I just want to highlight this for now. It is a good tail cancel. We're just doing a single contract here, but there you go. That is what this looks like. So if it works against us, if that option goes up to what we stand to make on it, throw out that stop order and let's see if we can get a fill near it. But it gives us also a pretty decent range. Well, there's a little bit of a buffer for the price to move around a little bit. Okay. Go through your order here. I'm going to send this on through. But my whole point here is on something like this to be mindful of. What do we really, really have working in our favor here? Maybe two key things to make this profitable. What are they? What are those two key areas that we might have working in our favor here? One of the big ones is we'll just go full black screen here, which is the way I like to do it. Now, if you look, there are a number of different studies done on theta. That is the time decay itself. When that theta, I've seen this, I've read about this, when there are 30 days left, 20 days left, it starts to really go crazy down about 20 or less days. Where are we at on this one? 17. That can work in our favor every single day. The market's opened or not, it's working in our favor, right? Weekends, holidays, premium and time. That's right. And direction of the stock too. Time, you got it. Theta, you guys nailed it. Exactly. And that's what this class is about, right? A lot of that theta. In this trade in particular was that premium. So the time element is central here, clearly. Also, what about the delta? I realize it's low. The delta's low because we went so far down. That's true. That's a fact. Let's get our charts back on. But just to stop here to think through this, what about our delta? Okay. Well, okay, it's about 15. So the stock, like right now as it stands, has to go like down almost a full dollar a day, even to catch up with that theta. It's kind of a race to the finish line, so to speak. There's over 17 days, but over the weekend it's shut down where theta just kicks in, or still remains, I should say. So with that, um, we were looking at a price pattern that looks good with fundamentals that are strong, right? We're just organizing the setup ahead of, well, a possible extension of the rally. Now, the other thing too is you could always come over here and just say, you know what? If this stock really starts to break higher, could I look for a long position? We don't really just we do actually in this stock this class we buy stocks. We buy a stock and then we sell a call for a covered call. But I'm just saying if it gets more bullish, sometimes traders will manage the trade as well with strength. All right, let's continue. It is. It is kind of wide. So yeah. Some would say, is it still solid? And that kind of depends. It looks like some would not say it's solid. Um, it really sort of depends on time remaining, how you feel about that, because there is that potential. Like if you wanted to close it, could it be tighter? Da da da. I mean, there could be a lot of different elements associated with it. So watch that closely. Okay. Did I just see something here? Did this spread just? Okay. Well, anyways, you were looking at AKAM. Yeah. This one was a lot. Wow, they did adjust it. So what happens when they're not, when time's going away? Sometimes they'll just, they'll give you some of that range back, between the spreads. I mean, it is one of these that, but you notice that it's like we almost kind of woke up the option. Anyhow, that can happen too. And when there's interest there, they might say, okay, if you're interested, let's get the spread where it needs to be, for example. Okay, just some thoughts. Anyhow, let's continue on. What else do we have out there? Let's get us another one here. Oh, this is in a company that's we looked at a couple of different pullbacks, but here's one that's maybe even breaking out that some traders could kind of surmise that hey, maybe there's going to be a by the way, what is this? I've got a marker on this up here. Oh, that's a long-term breakout. Okay, let me just kill that. That was a something going on there. Anyways, notice over here too, you're getting a little bit of a jump, a pullback, and maybe another potential follow throughs. You're getting signs of a breakout. The question is will it close above there? Because the market's not closed yet, and we could still come back down. I mean, that is resistance, clear resistance, resistance. And I would actually go back here and label some R's in there as well. It was a prior high that could still add to it, and we are testing it. So that could be an interesting point to keep an eye on here. It has been very, very directional, but let's just see what does unfold here. If somebody did want to sell, where might we be looking at here? Well, let's just take a look. I mean, here is, okay, if they were anticipating a breakout here, and let's say this one could actually be premium or a position too, either one, potentially. It's 70. Maybe there's some support there. Maybe they like the flag pattern. Maybe they think there's just potential for a continuation of a rally. Let's just do a 70. 70 over here. Wow, that's got, we're probably not the only ones looking at that option. That seems to be the highest open interest on it. The stock's nearing 4 million shares. That's 70 right there. So let's just contrast this. Again, we are below the 20. What do we have over here with our 70? Okay, so you can get it sort of depends on what you're expecting from the stock. If we thought the price of the stock was really going to rally and rally strong into the future, we could start off actually with a higher premium. So it sort of depends what you're looking to do, premium or position, or you just think it's going to rally. Because if it rallies up, this one would take the bigger hit in terms of the premium, which could work in our favor. There's just more there. That's what I'm leaning to. I mean, if it does rally up strong, what do we have over here? We're down to about, well, I guess the mid's about 90 or the mark's 90 versus what did we just see over here? About 210. So I'll tell you what, we'll just try this one. It's well, I don't know. It depends on the spread as well. The spread over here is better. Well, it's not that much better. Even though it probably just wakes up the option. I don't know. It may or may not. Uh, just like it did on AKM a little bit, but it just sort of depends over here what you get. I'll just do this one. So we're talking about it. The mid on that is 92. It's just an option example here. I'm just going to go 93. It's 92.5. Round that up, folks. In these cases, consider also putting that stop order in. I'll just do it before we're done here. As an example, if it is, I'll just make this easy on ourselves. We'll just say we'll get it at a 90, which is closer to the mid. And then we'll just say it goes against us by 180 there. On a single contract here, another short-term option, as you guys can see right there. But does that make sense? Clear as mud? Okay. I'm kidding. No, I think we're probably good on that. But let's just take a look at the confirmation dialogue and where are we? So the buying power effect on this one is a lot lower than some of those other ones. And one of the bigger reasons is the price of the stock is just a lot lower too. And we are lower as well. I mean, we're at 70, right? In terms of the strike. So a lot lower than our first one. That's the, oh, sorry, potential, credit or the max gain you'd get on that. And let's go ahead and send it through. There's your max loss as well. So I sent it through. There's our fill. We've got that all in place. And again, some people might want to exit early as well. Be sure to follow Barb on her X handle, which is Barb Armstrong CS. I am Mike Fairborn CS. Folks, be keeping an eye on what we're seeing just generally in the markets. We're seeing a lot of strength in the markets, and so but today we did do a number of short puts, three of them, and we looked at some specific key areas. And so, consider this, what we looked at today, positions and premiums. We looked at the strength of those positions. We looked at even some fundamental aspects because we're saying that, hey, maybe we're okay being assigned. This last one we just did on Dexcom, though, that was more like, holding a position per, potential. Well, I'm sorry, maybe getting a position as well as the premium, whatever. We're just throwing out some alternatives, some ideas here. But throw that out. Keep that in mind. It's been great being with you today. I really like filling in for this class. And be sure to check out Barb's class. And if you guys are interested, there are some other classes, swing trading, some others as well. So on that note, everybody have a great rest of the day, and we'll see you next time. Bye-bye.